Hello guys, this is Kritesh from TradeMans, and today I have come up with a very interesting video which will help you to understand the power of investing. Now in this video we are going to discuss a very famous stock which I'm sure that many of you might have already heard of. So without wasting any time, let's get started. So have you ever considered getting a deposit of rupees 13 lakh 8,672 directly in your bank account without doing nothing? Yeah, it's possible, and I'm not kidding. And in this video, I'm going to explain how a long-term investor, if you invest in an amazing stock, purchase it's at a decent price and keep invested for a very long term, then you can generate enough wealth to spend a very happy life. Now in this video, we are going to discuss about Infosys. So let me give you a brief background about Infosys. Infosys became public in year 1993 and its IPO price was rupees 95. So let's say you purchase 100 stock of Infosys in year 1993 during IPO or sometime after the IPO. Therefore, your initial investment would have turned out to be rupees 95 into 100, that is 9500. Let me zoom it. So here you can see that your initial investment is rupees 9500. Now from year 1993 to 2015, the company has given 7 bonuses and 1 split. Now if you don't know about what is a split or a bonus, you can check out my blog TradeCoins, and I have written a detailed article on both of them. Anyways, I'll give a brief description about what are bonuses and splits. So bonuses are a way of rewarding the shareholders by a company. So let's say company makes a lot of profit and it wants to reward its shareholders, so they can give bonuses to their shareholders. So let's say company announce a bonus of 1:1. This means that every 1 share that you are holding, you will get one another share. So if you have 100 shares and company announced a bonus of 1:1, then you will have a total of 200 shares, because 100 was your original share plus 100 free shares, total turn out to be 200 shares. Now what are stock splits? So let's say a company is trading at a high price, rupees 2000 or 3000. So this price is not affordable for all the average investor. In such case, the company might decide to split the stock. That is, let's say reduce the price of that stock so that it will help in increasing the volume of the company, and it will make also the stock very affordable for an average investor. So let's say a company decided to split the stock in a ratio of 2:1, which means that every one stock splits into 2 parts. For example, let's say you have 1 share of rupees 2000 and company decided to split into ratio 2:1. So after the split, you will have 2 shares of rupees 1000. Here your net worth is not going to increase or decrease, and it's not going to affect your investment in any way. The only difference will make in the number of shares you are holding. Previously, you have 1 stocks of 2000. After split, you will have 2 stocks of rupees 1000. So that's stock split. Now let's come back to the case of Infosys. From 1993 to 2015, Infosys has given 7 bonuses and 1 stock split. So let's move back to our table. Here I have collected data about the bonuses and splits by the company over the last 25 years. Now as we assumed in the starting of this video, we have bought 100 shares in 1993. In 1994, company announces a bonus of 1:1. This means that you will get 100 more shares. So your total number of shares in your portfolio will turn out to be 200. Now in 1997, again the company gives a bonus of 1:1, which means that you will receive the same number of shares that you have already in your portfolio. So you have 200 shares and you get 200 more, total will turn out to be 400 shares. In 1999, the company again gives a bonus of 1:1 ratio. So again the number of shares in your portfolio will double itself, so it will turn out to be 800. Now in 1999 November, the company splits its share in the ratio of 2:1, which means that every 1 stock splits into 2 stock. So you have 800 shares, it will turn out to be 1600 shares. Now after 5 years, that is in 2004, the company gives a bonus of 3:1, which means that for every 1 stock you will get 3 additional shares. So for 1600 shares, you will get additional of 4800 shares. So total number of shares in your portfolio will be equal to 1600 plus 4800, which will turn out to be 6400. Now in 2006, again the company gives a bonus of 1:1, which means that again the number of shares in your portfolio will double. So we will multiply this by 2 and it will turn out to 12,800 shares. Now again in 2014, the company gives a bonus of 1:1, which means that again you will receive the same number of shares that you are holding in your portfolio. So it will turn out to be 25,600. Now in 2015, again the company gave a bonus of 1:1. So you have 25,600 shares in your portfolio and you will receive another 25,600 shares. So the total number of shares in your portfolio will turn out to be 51,200. So here you can see that how over the years the number of shares in your portfolio keeps on increasing. In 1993 you have 100 shares and by the end of 2015 you would have 51,200 shares in your portfolio. Now let's see how much capital has appreciated over the year. So if we check the price of Infosys, we can see that currently Infosys is trading at a price of rupees 1219. So let's round up the figure. It will turn out to be 1220 and we will use this figure here. So if you multiply the current price of one share into the number of shares, that is 51,200, the total will turn out to be rupees 6.24 crores. So your initial investment of rupees 9,500 has turned out to be over rupees 6.24 crores. Now this is a big sum. This is the net value that you will receive after 25 years. Now don't forget about the dividends. You will also receive the dividends. For simplicity, let's only consider for the last 2 years. Although the company has given very decent dividends for the many past years, however here we are considering only for the 2 years. So in 2016, the company gave a dividend of rupees 24.26 per share, and in 2017, the company gave a dividend of rupees 25.56 per share, and the total number of shares that you are holding is 51,200 in both the scenarios. Now if you multiply the dividend per share by the total number of shares that you are holding, you will find the total dividends that you will receive in that year. So it will turn out to be 51,200 into 24.26. So here you can see that in year 2016 you have received a dividend of over 12 lakhs, and year 2017 you have received a dividend of rupees 13,872. Now the best point is that dividends increases over time. So this dividend might keeps on increasing with time, and the total number of shares might also increase in future. Let's say they give more bonus or more splits in the future, so the total number of shares might also increase. Overall, what I want to say that even if you don't sell your stocks, still you will generate decent wealth through the dividends. And anyways, your capital is also appreciating as the value of stock of the Infosys also increase in the future. So here you can see that how a long-term investor can generate a decent wealth if he remains invested in a good stock for a very long time. Now, I know you might be saying that this is not same for all the stocks, and this is just one stock. There are over 5,500 stocks in the Indian stock market. How you can say that all the stocks can perform equally? Now, I'm not guaranteeing it, and this is not an advisory or recommendation. I'm just saying that a good stock is able to generate very good wealth for its investors. Now, there are many stocks which has given even better returns than Infosys. For example, if you check the price of Eicher Motors, in the last 10 years, it has given a return of over 100 times. Again, similarly, if you check for the MRF, here again you can see in the last 10 years, it has given a return of 1436%. Similarly, if you see Symphony, in the last 10 years, it has given a very decent return. So what I'm saying that Infosys is just an example. There are many stocks in the Indian stock market which are capable of giving very good returns. And I'm not even talking about penny stocks or small caps. These small cap stocks or penny stocks are known for giving very good returns, but they are not very safe. All I want to say that if you are able to find an amazing stock and purchase it at a very decent price and stay in, and remain invested for a very long term, then you can generate very good returns from that stock. I hope you have liked the video. If it was helpful, please hit a like and subscribe to the channel. And if you are new to the stock market, feel free to check my online course. I have added the link in the description. Thank you for watching. This is Kritesh signing out.